All right, welcome back. 30 points on the Nifty right now. So 10,846 is where we stand. That's about 0.25% plus higher. We'll get to more stock-specific action in a bit. Mehrab Irani is with us. He's General Manager, Investments at Tata Investment Corporation. They have assets under management of little over 11,000 crores or so. Mehrab, it's always good to have you with us here. Thanks very much for your time. First up, just a quick comment on market levels, aggregate market levels, and what do you make of them? I mean, it's been a furious move up last few weeks.
Yeah, good morning, Prashant. Thanks for calling me. If you see, yes, the market has been moving at a furious pace over the last few weeks. And in fact, if you see last 1 year return in the index has been more than 25%. Mid-cap index has gone up by some 45%. If you see the third quarter results have already started coming in, the expectation is that the top line growth will be almost 17%, EBITDA growth some 11%, and maybe slight 50 basis point fall in the EBITDA margins, and a bottom line growth of around 18%. So on a valuations perspective, if we see today, we are almost some 22 times plus price earning ratio, which is almost at a 35% premium to the long-term 15-year average. Even on a price to book value, we are close to 3 times, which is also at a 15% premium, while the ROE has actually compressed by more than 250 basis points over the past 2 years. So if the earnings growth were to happen, I think then the index were to sustain. If we see returns from stocks comes from, one is the earnings growth, second is the PE revaluation, and third is the dividend yield. If you see last year, almost 20% of the return could be explained just because of the revaluation. And that is why we are quite costly. If you see in the US in the year 2016, around 15% return was because of revaluation, and in the next year, in the year 2017, there was earnings growth of almost 16%, and that's why the markets over there are decent. They are not cheap, but they are decent. If the same thing were to happen in India, then I think we would be in a decent range. And if the earnings growth were not to come this year, then I think we are in for some kind of a correction.
Okay. By the way, that news has worked really well for Cadillac Healthcare because it's a completion of a US FDA inspection without any sort of observations. That's good news for their API facility. Stock has shot up. Still, of course, some distance from the 52-week highs. Cadillac, of course, one of the better performers in the pharma space. Mehrab, since news just came in, let me actually take this up with you. The erstwhile laggards, when there were the two sort of pockets of the market, IT and pharma. IT turned around, and in fact, a lot of those companies have done exceedingly well. Many of them at their 52-week highs. Before I complete the question, I think there's some news coming in. To just complete the question, your views on pharma right now, because this is the one pocket where you can argue that there's still value. Stocks haven't run up that much, but the question is on growth. So what's your sense here?
Yeah, if you see, pharma has been one of the biggest laggards. There has been a lot of US FDA and other problems, and it is very difficult to estimate also that when this will end, where this will end, and what will be the final result of all this. Yes, the pharma has been a big underperformer, and a lot of stocks do offer value. And I think it is good at this point of time. I think we have to positively look at the sector, because I think a lot of the bad news have already come in, and I think on incrementally we are getting a little positive news on the sideline. So I would be quite positive on certain large cap pharma stocks at this point of time.
Buy a bunch of them and hold tight, basically, for the next couple of years. Is that the strategy?
I mean, buy a bunch of good stocks.
Good stocks,
yeah, good stocks and hold them, maybe.
So the belief is the worst may be behind?
I think so. It's very difficult to gauge, but I think so.
Okay. So another sort of laggard sector is IT. Same kind of strategy there, Mehrab?
Yeah, IT, if you see, has comparatively done better. It's kind of available at good valuation also. Some may say that it's a value trap, because there is obviously concerns are there on their business, etc., particularly in the large cap IT space. But if you see the mid cap IT space, I think there are many pockets which are doing quite good. There are very good ideas, and I think we have to be more positive on the mid cap IT space. If stock picking is properly done in the IT space, I think good money can be made from here on.
I believe you like private banks. And again, this is a space that's well owned. Stocks have really run up, gone through the roof. I mean, what now sort of would you buy? What sort of a trigger would you buy? And why not look at, let's say, maybe PSU banks, which are considerably sort of off compared to the private sector names?
Yeah. See, if you see the private banks, as you said, everything is good for them. Their growth has been very well. Their NPAs are concerned. Margins are reasonably managed. So everything is fine, and they have performed also very well. They are certainly not cheap. And I think if you see, as the credit growth picks up, the recent number was some 11%. So the credit growth has improved from last 8-quarter low. So if once the credit growth, etc., picks up, I think private bank is will grow at a much faster rate than public banks. So even at these valuations, I think for next, if somebody has to buy for next 3 to 5 years, I think private bank is a space to say. As far as public sector banks are concerned, yes, a lot of bad things have happened, worse things have happened, and a lot of incrementally some good news we are hearing, some action, whatever the government is taking, etc. So if some kind of resolution happens over there, selectively, yes, certain public sector banks also offer good value at this point of time. So I would be incrementally positive on public sector banks as well.
In private banks, it's the old guard which have been steady compounders, or some of the newer players as well?
If you see, one of the old guards, the well-known names have actually been really good compounders. If you see over last 1.5 years also, they have given phenomenal returns.
Just in last one
many
year.
have actually doubled also in last 18 months.
So purely in terms of, the mix in the portfolio right now, the whole large cap versus mid-cap debate, I mean, mid-caps have given tremendous returns, but as we've seen in this last week itself, I mean, you can really get burned as well if you don't sort of, get out at the right time, or if you don't hold the right kind of stocks. What's your approach to mid-caps now?
Yeah, I agree. I think mid-caps, see, India is a growth story, as we all know, and in a growth economy, mid-caps over longer term always outperform large caps. But at the current juncture, at the current valuation where we are at historic high valuation, we are 40% premium valuation. So at this point of time, I think it makes little more sense to be in the large cap space and watch what is happening over the next 1 or 2 quarters, how the earnings are spanning up, and then I think we should be overbought on mid-caps. But yes, selectively mid-caps will do good.
So any interesting themes? When everything's sort of, a lot of interesting stuff has moved. Graphite themes have moved. This whole formalization of the economy via GST, that's been one big theme of 2017.
Correct.
Anything on the radar for 2018?
Yeah, you are right. A lot of the metal, a lot of the consumers, etc. In a mid-cap space, and they have done really good. Entertainment, etc. Selectively everything has moved. So I would continue to stay, as I said, positive on banks, autos, consumers. I think they are doing very good, and pharma, I think we would selectively look at it.
It's a pleasure. Thank you very much for being here with us. Appreciate your time. Mehrab Irani at Tata Investment, with his thoughts on the market and what he likes. So private banks, autos and consumer names is what is top of his mind. We take a very quick break and we